China drip feeding the stimulus policy in recent months. What's different about this potential package apart from the size of it?
Well, I think that's a question that a lot of investors are sort of skeptically asking today. We did see a bit of a bounce back in the Hang Seng index, but that was already, of course, near that 19-year low, lowest since the handover. But elsewhere, onshore equity reaction has been much more muted, and it's because we have seen this very piecemeal effect towards sort of supporting the economy. Now, 2 trillion yuan of support via the stabilization fund is a pretty hefty headline number. We expect that to come mainly from offshore assets of state-linked and state financial institutions based in Hong Kong, but really to support the retail investor environment. The question here is not just really about trying to change the direction or the sentiment in the broader market, but also about trying to improve things for retail investors in China too. That is a connection that the average person who has exposure to Chinese stocks does connect. Beijing's efficacy in policy making and trying to turn around the economy and trying to restore growth amid this backdrop of falling and continuing weakness in the property market.
So, Rebecca, how had investors actually reacted to this potential package? Again, a lot of questions, a lot of we need to wait for the details. But is it broadly positive?
A little bit positive, but it's worth saying that we have seen these type of measures before, particularly back in 2015 when we had that stock market bubble. And sometimes these measures can actually be counterproductive. And I think that's why, for example, in the CSI 300, very little reaction actually at the outset. And then slowly it ticked up just a little bit higher. The Hang Seng was faster to respond, bumping up. But I think there is this deeper skepticism, particularly among foreign investors, around the direction of travel for the Chinese economy. This is not just a question of stabilizing what has been sort of quite a battered market. We had this series of grim milestones for the onshore and the offshore Chinese equity market. It's not just a question of sort of momentary stabilization. It's really a question of the broader, longer-term approach of policymakers and just how much stimulus they are willing to inject as we continue to see some parts of financial markets really sort of dwell in the doldrums here. And I think for many foreign investors, they're not seeing enough support coming through to sort of change a more fundamental question around the investability of China.